Hi, a great Friday evening to all present here. I, Akshara Menon, unless at PMS Bazaar, will take the pleasure in welcoming you all for the second episode of Alternate Universe on private market and alternative investments in NRI Perspective. I'm glad to welcome the guest for the day, Mr. Krishnan Ramachandran, the CEO of Barjeel Geojit. Hello, sir.
Hi, good afternoon to everybody.
Okay. Along with him, I would like to welcome the moderators of the day, Mr. Vikaas M Sachdeva and Mr. Madanagopal Ramu as well. So moving on to the brief, Mr. Krishnan Ramachandran, a chartered accountant by qualification. Mr. Krishnan has more than 30 years of experience across a wide spectrum of business in financial services. Since 2006, he has been the CEO of Barjeel Geojit Financial Services LLC, Dubai, which is a leading financial intermediary. He also oversees the various GCC joint ventures of the parent company, Geojit Financial Services Ltd. Barjeel Geojit, under his tenure, was awarded the Best Financial Advisor Award for the NRI category for 8 years in a row for the time period 2010 to 2017 by UTI CNBC TV 18. The company was indebted by UTI CNBC TV 18 into their Hall of Fame for years of 2018 to 19 and 19 to 20. In 2020-21, the Economic Times recognized and awarded Barjeel Geojit as one of the best brands in UAE. Mr. Krishnan has been recognized by International Advisor in their global listening, IA100, the industry's most influential for 2019-20. He has led many initiatives to promote India as an attractive investment destination and is a regular contributor to media publications in UAE and India on investments, policy issues, and macroeconomic trends. He is a member of ICAT Toastmasters and have served for 2 years an executive member of ICAI Dubai chapter and member of IBPC. Moving on to our moderator of the day, Mr. Vikaas M Sachdeva, the Managing Director, Sundaram Alternate Assets Ltd. He's an industry stalwart with over 3 decades of experience in asset management business. He's currently managing director of Sundaram Alternate Assets. Starting his career in asset management as one of the founding members of Umbrella Sun Life International AMC Limited, Vikaas has been with global organizations like ING and AXA in India. He has been the CEO of Edelweiss Asset Management Limited and Global CEO of Inam Asset Management Limited and CEO of MK Investments Management Limited prior joining Sundaram. He also served the board member of AMFI and was the Mutual Fund Advisory Committee of SEBI. Moving on to the next, Mr. Madanagopal Ramu, the Head Equities and Fund Manager, Sundaram Alternates Limited. He heads Equities and Fund Manager with over 15 years of experience in the Indian financial markets. He currently manages an AUM of 3,400 crores across PMS and AF platforms, some of which have recently won awards at PMS Bazaar's PMS ranking for the financial year 21 and 22 event. He comes with a strong academic qualifications as a qualified CA, cost accountant and management degree in BIM Tirchi. Thank you. Over to you, Mr. Vikaas.
Thank you, Akshara, for those kind words. I must tell my audience that I've got a bad throat. So I've got my colleague Ajit Narasimhan, who heads corporate communication and marketing at Sundaram, to chip in with the questions which I wanted to ask. But there's something which I would not leave for anybody, which is the personal introduction of Krishnan, the person behind the professional. I always enjoy doing that. And I thought I'll just do this before I hand over the baton to Ajit. So Krishnan, I have actually spoken to quite a few of your colleagues, both within India and outside India. So I'm going to just share with you some of the things people talk about you. I think when I asked people to describe you in terms of one word, so the adjectives which came across was truthful, transparent, genuine, family man, humble, friendly with colleagues. I would tend to vouch for quite a bit of that. I've been associated with you for the last 15, 20 years. You have a lovely wife, 2 daughters, 1 daughter in Dubai, 1 in the US, one of your daughters is married. You love traveling, is what I believe. And your favorite destinations are Switzerland and Paris. I don't know whether you've tried some of the Swiss chocolates there, but if you have, I wouldn't be surprised. You love driving. And one of the things which is common to both of us is your favorite brand of car is Hyundai. Even I love their cars. You're a big movie enthusiast. You're up to date in terms of seeing the latest in Tamil and Malayalam movies. But I must confess, most of us North of the Vindhyas are increasingly matching up to you. We're all very fond of Tamil and Malayalam movies. You're extremely fluent in a few languages, including Hindi, which has helped you build an extensive network of people around you. You do enjoy a tipple once in a while. You love whiskey, you're partial to whiskey, and your favorite brands are Chivas and Glenfiddich. Your colleagues describe you as extremely strong-willed, and currently, one of the manifestations of that is you're on a mission to quit smoking completely. More power to you, sir. You follow tech trends, you're up to date on them, and you're the latest in terms of gadgets and utilities. One of the things I think your customers talk about you is, and I would vouch for that, is that you've built a very strong customer-centric culture. I tried very hard to find some quirk about you. Finally, one or two of them said that, you know, he's a very nice man, he's a very patient man. But one of your pet peeves is that you hate people wasting your time with an argumentative mindset without giving you any solution. I guess I would understand that. Thank you for gracing our show, Krishnan. Over to you, Ajit.
Thank you, Vikas. Good evening, Krishnan. Great to have you join us this Friday evening. Let's quickly get started. So like Vikas said in his intro, you played a pivotal role in the development of the overseas investment landscape for NRIs at Barjeel, Krishnan. Tell us more about your journey and how the landscape for alternatives in specific has evolved over the years.
Thank you, Ajit. And before I start, I must thank Akshara for the normal formal introduction which I normally hear, and for the horoscope that Vikas ji has, put out. And a lot of things were surprising for me itself. The only thing is, I hope my wife is not listening into this, because she is going to dispute most of the points, all the good points about me. So anyway, thank you very much, and for my introduction in a different perspective. And coming to what Ajit was mentioning, I think it's good to take a step back to understand the transition that has happened over the time. And I have been fortunate enough to be part of this industry for more than 30 years in various capacities, from an investment banking perspective to a finance perspective, and then into the financial market. So this has been a journey that I've gone through, and the last 18 years of which have been spent in the UAE. It's very, I think the NRI is also transitioning. It's not that, I think when people start talking of NRI, people generally felt that he is a non-returning Indian. That was a sort of a phrase that people used to give. And we used to feel a little, upset hearing that word, saying, end of the day, I'm eventually coming back to India. So how can you call me with such terms? But the fact of the matter is that he is today a non-returning Indian. The NRI has evolved over the times, and to a great extent, from the clientele and the people that we network with on a day-to-day basis, the whole profile of an NRI has changed from being pure centric into building physical assets was the core key at one point of time. And over time, they have got into a diversification into various investment options. Starting with India, most of them do start their investment journey with India as a perspective. And over time, the character of the NRI has dramatically changed. Today, an NRI is looking at not only India as a market proposition, he is looking at any investment proposition that is able to make returns. So earlier, we were only competing for the NRI funds, but today you are competing with NRI funds globally against global investment options. So that is where the NRI is positioned today. And just a word about Barjeel Geojit Financial Services. We have been in this region for the last 20 years, catering to a large segment of the NRI customers in this region. In a nutshell, if we want to explain our business, except for the local markets, we cover all the markets, India in specific and global in particular. When we started 20 years ago, it was only India. 100% of our business was from India, whether it is on the equities or on the fund side. Today, that is now about 40-50% India and 50% on the global side. So that's how an Indian-centric company, which was meant for wealth creation for Indians, has evolved itself. So you can imagine how an NRI would have changed over the last 15-20 years as well.
Very interesting. So, going a bit deeper into NRIs, Krishnan, what are the potential benefits, for NRIs investing in alternatives specifically again? Are there any tax implications, for them investing in private markets and alternatives?
I think over the recent years, at least in the 3 to 5 years, alternative investments or private markets, whichever way we want to call it, has become a sort of a compelling investment case. I think we should understand that earlier there was very little options available for an NRI. Even from a regulatory perspective today, I would say that I tell in many of the forums that an NRI actually is disadvantaged many ways from investing into India. An FPI, for instance, has got more liberal ways to invest in India than an NRI. For instance, an NRI, if you look at an NRI who wants to invest in direct equity, we have this an age-old PIS, that is a portfolio investment account that an NRI has to have, and he can have only one of it. And so today, he is restricted in many ways. That's one reason probably if an NRI opens an account, a PMS account through his NRE account, he cannot do trading. An NRI cannot till recently, till some few years ago, about a couple of years ago, we couldn't invest into debentures of India. Today it is changing. Today they say, okay, NRO account. So a lot of NRI assets does not enjoy any great benefit from an average Indian today. The only thing that an NRI enjoys is his NRE account, which is tax-free. That's it. The interest which he receives on his NRI account. All other investments that he does in India is taxable. And he is also, there is also the KYC requirements and the other onboarding process is also a little more complicated for NRIs. So alternatives as a space has been a sort of a flavor in the markets. And over the last few years, we are seeing a lot of interest in these segments. It could be on the one of the alternatives. I think if the way it started in early days was some of the real estate alternative funds that came about. Then there are equity alternatives, but there is a lot of interest that is happening in other segments like in the private equity capital space and other alternative structures that are coming up. So the NRI is looking at these options and they are looking at see how we can benefit from an increased return from his normal equity or a mutual fund basket, which he was otherwise exposed to. From a tax benefit, like I mentioned before, it's almost the same actually, but we are actually disadvantaged in many ways. For instance, when there is interest income happening from an NRE for a non-resident, we are deducted at the maximum rate, 30%, whereas in India it's different. So a lot of NRIs look at the tax regime and the perspective in India before they take a call. And that's probably one of the things that we hear about is the emergence of GIFT City, which I think is going to make a strong case for NRIs to participate in India markets. I'm told that an NRI doesn't even need a PAN card for an investment through GIFT City. So I think that landscape and the ease of investment process, if it is established through a center like GIFT, I think will be a good option for NRIs to look at these markets very favorably.
Sure, I think it's all adding up very well. Madan, I'm sure you have a lot of questions as well to.
Yeah, sure.
You know.
Yeah. Good evening, Mr. Krishnan. Had a chance to sit with you on the panel in Dubai. Wonderful session it was. Thanks for hosting that session. And sir, as fund managers sitting in India, we always talk about India growth story and the great returns that Indian markets offers to the NRIs. Obviously, there is a perspective about how an NRI thinks about the Indian markets, and obviously returns are attractive, but also there are other factors which determines whether a person wants to invest into alternates or equities in India, right? First is from our point of view, what are the options that are available for an NRI is equally compelling to an India, as well as what are the factors the NRIs have to keep in mind when they are looking at alternate investments in India? If you can take us through, that would be interesting.
Yeah, thank you. Nice talking to you again, Mr. Madan. I think we had a wonderful session last week in Dubai. From an NRI perspective, I mean, like I mentioned before, the choice for an NRI today is not limited to India. He's looking at various other options. But then various other options also come at a sort of a risk-benefit relationship that one have to assess. All said and done, I think there is always a soft corner for India because they understand India. They understand how things work in India. They understand the growth opportunities of India. I think today, with the sort of information flow that is happening across channels, I think almost every minute, even a person in the GCC or in the UAE, anything that happens in India, we are privy to that information in a matter of seconds or minutes. So it's a question of the understanding of the market is there. So a lot of NRIs perceive India as a good investment destination and a market which can deliver returns. There's no two questions about it. But there is also a question of looking at alternatives in the other global markets. For instance, the debt markets globally, which is giving some sort of fixed returns. The overreaching concern of an NRI always seems to be the rupee dollar. Where is it going to go? And I think when Vikaas ji was doing that presentation, he has clearly established how over a period of time the India has been one of the best dollar returns markets in the world. So this is something that we also educate our investors, and also the fact that that they need to not only look at a PMS or investment into mutual funds or direct equity, but adding today, if you look at adding say a 20% or a 40%, you add a small portion into alternative markets, which is going to be a more curated portfolio, more efficiently managed. I think the return perspectives are in the region of between 2 to 5%, depending on how the mix of the allocation varies. And also the volatility is also coming down dramatically. So it's a good scenario for NRIs to look into this alternate space. However, I must say that in one way, alternates have been present in the GCC markets in one way or the other for the last, if I remember, maybe for more than 13, 14 years. I think way back, this alternate space started with some of the Indian asset managers or banks running these real estate portfolios. So that's how the market started in the alternate space. Through some of them came through their offshore centers, and some of them came in directly as well. And then a lot of other mutual funds started purely on real estate play. Believe me, that experience was not well received in the market. I think even though there have been a few success stories, but the fact of the matter is the disappointments were more than the successes. So today, when they are re-evaluating the whole scenario, because India again is becoming a very regulated in many segments, like whether it is the property market or any other alternative segments or in the bankruptcy code, etc. Things are evolving a lot. So gives them a lot of comfort to look at the alternates market more seriously.
Sure. One additional question. In the last, say, 3-4 years post-COVID, a lot of money that is getting pumped into the market, and then we have this Russia-Ukraine war happening. Has it anything dramatically changed the way the NRIs look at the various options in front of them? Obviously, India looking better because the economy is doing well and people are interested in India. Has it anything? Is this the only reason why economy is the only reason why NRIs are looking more at India, or are there not really much options available, and that is really creating a positive scenario for India?
I think post-COVID, there has been a sea change of the interest of NRIs. I'm saying even globally, investors have behaved very differently. Even in India, we saw the number of account holders, new people who came in, and the market rally during the lockdown really brought about a serious interest in NRIs here as a problem. As a matter of fact, after many years, that lockdown period was the time that we opened maximum accounts, trading accounts into India, and new clients into the market. So that was the sort of interest they were looking, because they were putting money in any place you put the money, and you're seeing returns happening in the next 1 week, 1 month. You're seeing double-digit return happening, not only in rupee terms but also in dollar terms. And one of the asset classes that really was that people looked at seriously from this part of the world, at least, was the crypto space, which again was a sort of an activity that picked up. But I think today, after the 2022, I think things have normalized a lot. I know the pain of reckless investing is really visible. At that point of time, it was like anybody wanted to put any name, you just say it was getting invested. That was the sort of scenario, especially in the UAE, that we were seeing. And 2022, I'm sure, as you are aware, there was all asset classes across the world delivered negative returns. There is, except for commodities, which has delivered some double-digit returns, which in 2 consecutive years, but almost all asset classes have given negative returns. I think it's from a historical perspective, that is probably one of a black swan sort of an event in terms of all asset classes not failing to deliver. So to that extent, many of the leveraged products, structured products, people investing in that have had huge problems and margin calls towards that point. So I'm sure that in the coming year and the coming years as well, the NRI would look at more structured way of investing and taking the global cues more seriously and trying to see where he can allocate his investments and ensure that it becomes a sort of a risk-adjusted sort of returns is what they would look at.
Sir, I have some more questions, but I think Ajit.
Sure, Madan. Yeah. So, Krishnan, zooming in a bit more into your industry, how has the advisory space evolved over time? And also from a regulatory point of view, right? Do you feel that the regulations for alternatives are a bit more stringent vis-a-vis traditional investments? How do you compare the two?
Yeah, I think it's a nice, good question that we have to take in perspective. But the financial advisor's role, as much as people would try to say that that the contribution or what a financial advisor does is sort of a regular discussion that happens with everybody. But when you, from an advisor's perspective, what people should understand is that every client is unique in his own way. You don't find a client who the same sort of requirements from each set of clients. So each client has got his own unique set of requirements. So depending on his background, depending on where he has to allocate, what his future is going to be. So a lot of consideration and points have to be considered before you advise or talk to a client. So what I would say to you may be very different to what I will tell Mr. Vikaas when I'm talking to him, because both of you come from different expectation levels, different background, different financial requirements. So it's a question of how we do it. So the financial advisor role has become more critical today, and especially today when the client is quite well informed. Early days, the client was not aware of what is a mutual fund. They won't even know the difference between an open-ended fund and a closed-ended fund. Those were the sort of people we were talking to, maybe 10, 12 years ago. But today, a client comes to you and he's asking questions that you may not even know the answer readily. So because they are informed with many things in terms of where they should put their money, why we should do insurance, why we should do alternatives, why we should do this. So they have a lot of questions and expectations, and they also understand the risk that is they are getting into. So to a great extent, the role of financial advisor has evolved dramatically, I would say, in the type, because the market's maturity in the types of things happening across the world. So the financial advisor is sort of a key person, especially when he's dealing with a sort of a HNI investor, to understand and allocate his portfolio in a more efficient manner. Regulatory framework, I'm sure, I think over the last 10 years, it's a big thing that is happening across the world. Not only I'm saying in India, when we deal with India or when we deal here, the sort of compliances that we have to go through in terms of AML monitoring, in terms of, the net worth assessments and all those things are all very critical parameters today. And there is also a FATCA reporting, many things that happen when it comes to from a local regulator. And the local regulators in the UAE, for instance, are also very particular that they have fixed certain high minimums. So they keep their own minimum. They would say that any private fund offering has to be sold for a minimum of, say, 500,000 dirhams or 1 million dirhams. So they would, depending on the type of the product, from the jurisdiction in which it comes from, the regulatory oversight is quite strong. As a matter of fact, recently the regulators here have dramatically changed the regulations in terms of how do you sell private funds and how it can happen. So it's bringing a sea change, because there are many participants who are there from the private side, and you have to take the best out of the many that is coming in. So it becomes very important that there is a sort of regulatory oversight, and the advisor's role, especially when he is dealing with an alternates or a private market investment, is critical, I feel.
No, I think it's fair to say that the entire ecosystem, all stakeholders have evolved, matured over the years. In that context, Krishnan, how does the due diligence process at Barjeel work, before you onboard a strategy for your investors? It'll be good to hear your thoughts on that.
I think that with the wonderful introduction that Vikaas ji gave, I think one point that I will accept and take is the fact that we are an extremely client-centric organization from the business perspective that we do it. So it is very, for us, any product proposition or any evaluation that we do on a product has to be good for the client, one, and has to have a track record, a tangible group or an investment group behind the whole proposition. I'm sure we are all aware that, even if you look at India, there are, when I was looking at the SEBI side, you're talking of about 1,000 AIFs registered in India alone. But you cannot, from a distributor perspective or an advisor perspective, you have to choose what is the best available option that is available. So for us, it is very important that whoever we talk to have a good track record. They come from a good pedigree. There is a sustained, they have their feet on the ground in terms of delivering returns. So we will probably not look at an alternate who is coming for the first time into the market, however good he may be. There have been many good names from fund managers from India who have running AIF portfolios. So we have not started work with them. We just want to see that how they are doing with the on a 2-3 year track record. How are they performing? And of course, the portfolio, the way this is being generated. And for us, even when we are doing a mutual fund investment, our analytics is not based to what a value research or a money control recommendation goes. We actually have a back office system which evaluates portfolios on a month-on-month basis. If tomorrow, if you ask me that ABC fund in India, the next month, we would be able to tell you what was the portfolio changes, why is it happening, and we are trying to be predictive in terms of how will this fund do in the future. We are looking at those sort of things going forward. So the same process is what we would apply when we're looking at alternatives as a space. So today, our alternatives as a space is sort of a small basket. But 2023, we feel that this is a space that gives an opportunity for investors to come in, because the market in India has evolved. We have got a 3-5 year track record of operations in this alternate space. And so there is some basis to look at this model very seriously.
So it's all about the customer. Great to hear the customer centricity piece. Madan, I'm sure you have a couple of questions on customers next.
In fact, before Madan starts off, I think I must compliment Krishnan. He elaborated the role of an advisor with such simplicity and fluency. I think I will probably go back and listen to this once this show is back again. Very, very simple terms. I quite like that. Madan, over to you.
I had one follow-up question actually. When you mentioned about alternates becoming little attractive and 2023 you're looking at it. Just a question slightly away from what I thought. We have equity as an option, right, in India. Obviously, the returns in equity can be anything given a year. And rupee probably hurts you in a bad year, but in a good year, the equity can compensate more than what you kind of can get impacted on rupee. And that is why the rupee depreciation adjusted returns are still better in India. But how does the private credit fit into this entire or credit markets? And alternates, even private credit is an option which is opening up, a lot of interest are there in India. How does it look at, from your perspective, how does it look? Private credit, which is a fixed income sort of a thing, as well as an equity. And given that INR plays an important role in the NRI's decision making, how does it fit inside?
Yeah, see, it's that's what like I mentioned before. There is one thing on the equity side, which is a sort of from a long-term perspective, it is easy to assess. For instance, if I have to look at a Sundaram Alternates fund, we go back to say, okay, we know the portfolio, we know the background of the manager. So it's easy to sort of judge and say, okay, this is the sort of return that you will generate from your equity offering. And you will have probably, because of your filtering process or the way you manage your fund, you would probably deliver 2-3% extra over the normal market returns, which is something easy. Private credit space is something that is actually, a lot of people have started talking, have come to us also from India to talk about the private credit space. I'm really amazed in terms of the way this market has evolved. Because today, if you look at the debt or the fixed income market, is when the challenge for the NRI is that whether he would want to put the money at about 8-9% return, and then look at the depreciation of the currency, and end of the day, he's getting only a 5-6% return. But on a private credit market with a little bit of a risk, you are able to sort of generate a better alpha from a normal G-Sec deal or a corporate AA paper. So even I'm saying even a BBB paper, the credit market is looking at delivering a little more than the BBB sort of valuation today in the market. So you're talking of 12-16% sort of growth. And I had a very interesting conversation with one of the fund managers a few months back, and he was telling me that how they manage the risk on the credit side. That it is a lot of, they are also linking that credit, what they are extending to the trade finance or whatever they are doing in the to the companies. It's linked to the digital space of the revenue that the bank accounts are, they are able to take the money out from the bank account without a problem, because these are all mandates that they sign up with the company, so that the risk on recovery has been mitigated to a great extent. And that same story is also holding good when somebody is doing some lending to a microfinance company, where receivable management is a very key issue, especially with UPI and the sort of digital convergence that is happening in India. The risk on credit seems to be reducing quite a bit. So I'm actually looking for people with good product proposals or propositions that can come on the credit space, which will actually generate a better alpha. And end of the day, without leverage, without doing anything, he would still make a 7-8% dollar return. And I personally feel that the alternate space has a very good opportunity there. If they come up with a good credit proposal which can deliver decent returns and translating that into sort of a good dollar returns, because 6 to 8% dollar return, if you're able to deliver on the credit space, I think it's a win-win situation. But end of the day, I think the risk on credit and how you monitor is becoming a key. That will have to evolve, and we will have to see how that space pans out in the next few years. But for me, that space is a very big space that can happen from India.
Interesting to hear this. And we have also launched one private credit product. I think Vikaas would have talked to you about it, obviously. So it's very interesting to. And you talked about how you also touched about fintechs in that aspect. And there are also fintechs in the wealth management space and advisory space also. How do you see them evolving in your opinion? Is it the alternates is a space where you think, particularly with respect to NRI perspective, you think they have a real chance, or it also requires a foot on the ground and being very personal? That I always felt that we also interact with a lot of clients in Dubai. The most important factor they look for is trust and the personal touch. So how do you see this in the context of these fintechs emerging right now in the wealth space?
I think the last few years, I'm sure you're also aware, the fintech is playing a great role in terms of not only dicing companies, but also throwing up market recommendations. For instance, on the equity side, we run a product called Smartfolios, which is a sort of an AI-generated product which gives a client 5 to 6 stocks to buy today, and maybe he will rebalance in the next 1 week or so. So there is an active participation of the client and the product that works in favor of the client over the long term. So fintech has evolved to a great extent. Now, if you look at insurance segment or you look at the fund segment, because of the variety and the time horizon spent in those products, there are a lot of comparable products. Like I say, one is the simple process. I think it started with comparisons, but then it is now evolving into more serious study of each of those portfolios. Like I mentioned, it is very important to run a back testing of each fund manager's portfolio, because for us, end of the day, it is the competence of the fund manager that matters. Whatever happens, the fund manager has to deliver. So given that sort of a situation, the tools available for people and invest from an advisor perspective is that we are able to judge these portfolios and also sort of get into a predictive mode to say how these portfolios are going to do. So to that extent, a large segment of the market is getting into that. But from an alternates perspective space, I think, if I may be right or wrong, but I feel that it is too early stage to get into that sort of a model. Of course, I think PMS Bazaar is doing something on those lines in terms of comparing various alternative funds and other things. But to get into more serious analytics, I think once the market expands and we have more players, I think fintech is bound to play a role. But fintech is, for me, I would look at it mainly as a sort of an overreaching advisor role, or gives you an out-of-the-box thinking, or it gives you a perception of what can be done. But end of the day, I think people have to take a judicious call, and it requires, I think this industry for some time will still require the physical interaction for investors to participate, especially when you're talking of a product like alternates.
Sure, so thanks for taking up my questions. Ajit, over to you.
Yeah. So on
Ajit,
products,
maybe we have time for one more question for you, because audience questions are pouring in. We've got some 12, 13 questions already. So maybe one question. I give you one question.
Yeah, sure, Vikaas. Well, let's have one. I think Krishnan was talking on products. It'll be good to hear, Krishnan, from your point of view in terms of the, what is your typical asset allocation from a typical NRI point of view, right? It'll be good to understand that. We've spoken about alternatives, but overall asset allocation, what do you think is their sweet spot?
It's like I mentioned, it's a very, that asset allocation, like I mentioned, we cannot, make it like a thumb rule sort of a thing. The thumb rule does exist, that, where people were talking that when you're 60 plus, you will put less into equities and more into debt. I'm a person who doesn't believe in that at all, because the retirement life of a person is more than his working age today. So it's very difficult to say that when you're retiring, you put all your money in debt and you sit. So I think the models of portfolio theory, in my view, is dramatically changing to a great extent, and equity allocation and debt allocations are crucial. But the sort of people, the historical perspective of doing less to equity and more to debt is something that will not hold water in the long term. Because today, we know how just 2 years back, we went through one of the worst interest rate regimes, and today we're looking at an interest hikes going. So with this sort of volatility, and equity as a class, I think we have enough data to establish in a block of 3-5 years, you always make better returns or close returns to a debt or better returns than debt. So you have to have a balance of both. So from an NRI perspective, typically in the old age, NRI was looking at, his first priority the moment he lands to anywhere outside the country was to see, I have to build a house. So physical asset was the core. It still remains. It still remains to a great extent that they want to create physical asset. And then the next question is, getting into looking at, there is always this this attachment to gold from an India perspective. So to some extent, it is reducing to a great compared to what it used to be before. And then the portfolio allocations are today a typical a non-resident, I wouldn't call an HNI, but a mass affluent working per person in the region for say 20-25 years is looking at how will I maintain the same lifestyle. So the question today, it's become a lifestyle issue. It's not the question of getting a sort of a pension after or getting 10,000 rupees or 30,000 rupees back home. Today, it is lifestyle. If I am living a sort of a lifestyle today, will I be able to continue that same lifestyle in the next 5, 10, 20 years? Because I'm going to be today the aspiration to travel, for instance, for post-retirement is much more than when you were in service, because you are able to spend more time outside of India. So all these factors have to be put in, and when you put in the numbers and actually see that what sort of figure a person requires, it is actually, I think some people, one of the thumb rule they say is 100 times your last drawn. It doesn't work, because it is simply at some point fail you miserably, and you will find that after 10-15 years you're sitting on negative cash flow, or you're sitting on debt or whatever, unless you have created some physical asset that can generate sort of revenue. So it's very challenging to today's environment to really do a asset allocation. The one thing that we always insist that they have to start these allocations early. It's very important that whether it is an NRI or anybody, we always talk, when we talk to our client, we tell, why did you come to the Gulf, or why did you come here? Well, first, when you board a plane from India to the Gulf or wherever, you are thinking at the time of boarding the flight, you say, I want to save money. You are going there to make money and save money. But when you land here and spend 3-6 months, I think that savings perspective somewhere takes a backseat, and you are getting into a lifestyle model. You get carried away by what is happening around you, and you get into a sort of a debt tangle, a credit card issues, and a lot of other things happen. So this is a typical thing that we see. So it's very important that you start early in life, whether it is any asset class that you want to do, whether it is a mutual fund or insurance or getting into direct equity or alternatives. It's very important that you plan, so that by the time you finish your working life, you are sitting in a corpus that will enable you to live peacefully and happily in the next 15, 20, 25 years. That is the sort of post your normal working life. We can't call it retirement anymore, but post working life is about 25 years for everybody, and one needs to plan. So it calls for serious discussion with each client, and it involves, and it's today becoming a great extent, I would say, for the last 15 years, I've seen a shift from becoming an individual decision to a sort of a family decision. Today, the spouses, I'm very happy to see many of our clients come with a spouse and discuss what they would do, what they need to do. So to that extent, portfolio allocation is becoming a very interesting area to be in.
So fascinating. Thank you, Krishnan. Because I see a lot of Q&A buzzing here.
Yes.
Want to take it from here?
So I think I am going to exercise my vocal cords a bit. So I have 2 sets of questions coming in, Krishnan. One are specific questions relating to certain specific investment avenues, and one are slightly broad-based questions. Okay. I'm going to read out then. There are two things.
Okay.
If you wish to skip a question, just let me know. But I must tell you that the best question here will win a prize from Sundaram Alternates. Okay, so you are going to be judging that.
Oh my.
There is a few questions which came in from somebody called anonymous attendee, which I think later on I realized that his name is Veeramani Rajashekaran. If it is, sir, please do confirm. He started off by asking a question saying, could you please tell me whether the salary earnings euro to be accumulated in tax savings or to be transferred and kept in INR, tax-free NRE accounts? Would you like to take this one? Yeah. Could you please tell whether the salary earnings in euro should be accumulated in savings or should be transferred and kept in INR, in tax-free NRE accounts?
I mean, that is it's a pure currency play that we are talking of in terms of, see, compared to how the rupee has behaved against the dollar. With the euro, it is a little more, the fall of the rupee has not been so popular it's not been so much compared to the dollar vis-a-vis the euro. To a great extent, when you're moving money to your NRE account, there's always the cost of repatriation and other things is something that one needs to look at. So, and as much as it is very easy to say that I can move money to NRE account and I just move back money, when you're transferring tranches of euro to your NRE account, both on the currency side, you run a risk in terms of cost for the whole transaction. It is not as transparent as it is used to be. So euro, if you are living in a eurozone, you are taxable, your income is taxable, and it's only the available. The question that you would probably want to address is the fact that the euro deposit returns are very low. So whether it makes sense for me to park money in an NRI deposit, which is giving me maybe a 6-7% return. So that is possibly the sort of association I relate to that question, because if you put money in a euro deposit, the returns on your deposit is not going to be. So you have a spread of around 4 to 5% today. So to that extent, if you are able to match the currency issues, I think keeping money in the NRE is feasible. But there are many structures available in the currency market. You don't have to looking at rupee alone. There are some wonderful Japanese yen structures that has been going on in this market for more than 5-7 years, which is giving you 8-9% return, relatively free and safe, I would say, in compared to what you are talking of. So you can look at other multiple options from your banker. They should be able to sell. A lot of business especially in this part of the world is happening on the yen.
This is amazing. Your vantage point really expands things. There's a specific question Mr. Veeramani Rajashekaran is asking. He's named a bank, but let's take it as a proxy for banks in India. Equitas Small Bank NRE account offers 8.2% per annum for 888 days. Is it good to lock the FD at this level? If yes, what is a better option, monthly or quarterly? Would you like to answer that?
I know that's as I mentioned before, the same, I think it's the same person who asked the question. So he's looking at comparing his returns on the euro to what he would probably get on the debt side.
Understood.
I mean, the risk is on Equitas Bank. I'm not able to comment on how good or it's a small bank, if I understand right. It's not a debt space. So it's a call on how you rate the bank and how you look at it. So ultimately, if the perception is the bank is good, 888 days is quite a long period. You're getting 8.25. I think some of the nationalized bank in India are also giving close to 8% on these sort of tenor deposits.
So Mr. Krishnan Iyer is asking, considering currency, taxes, product costs, etc., all of this put together, according to you, which is the most important for an NRI while making a decision? Or maybe you can list them down in priority.
Now you mentioned what currency?
Currency, taxes, cost of product.
Yeah.
He's mentioned 3, so you could take any of your picks as well.
See, from a tax perspective, when an NRI is investing into India, it is the same taxation that happens for him in terms of what taxes and you would pay in India, you would pay there. But actually, in some of the investments, like a mutual fund, for instance, you can actually use the DTA to your benefit, and you can actually, your capital gains that you make can become fully tax-free if you're able to use this. It depends on which jurisdiction you are coming from. So tax perspective, if you're looking at India per se as an NRI, I think it's very important to understand the DTA from the location in which you are operating. For instance, in the UAE, if you make gains from mutual funds, capital gains from mutual fund is fully tax-free for if you get the tax residency and you're able to establish, it's a tax-free income that you can do, not on equity side. So it depends on how you are able to structure your product. Cost, I think to a great extent today, I think India is probably one of the least cost regimes in terms of whether you talk of a mutual fund or you talk of brokerage structures that are available here. It's very, actually, we say that global investing on funds is actually more expensive than India for a retail investor. It's not easy you can't walk into a global fund house and say, take my application, like how you do in India. So, and there is a cost. You work through platforms, and the platforms typically have 1 to 2% cost over and above the fund management structure that avails. So I would say India investing is, from a cost perspective, even though because our transferee levels of SEBI are so high that you have to illustrate everything for what everything is there. So from a cost perspective, I think we are almost at par in many of the investment options that we have. So to that extent, I think it's a personal choice in terms of which segment you want to invest, and that would run the decision. Because for me, if the value proposition is higher than the cost and you're making a benefit, I think cost is a secondary issue. But if you know that India is a growth story and you're going to make your 10-12% in the next 5 years, I think cost at this stage should not be a concern. I think you should look at the future rather than what you're going to pay now.
Interesting. Very, very different thought, that look at the value proposition.
Absolutely.
Everything else will fall in place accordingly. Good point. Mr. S.N. Verma is asking a question. He's saying, planning to move to USA at 76 green card. I have all equity mutual funds and stocks currently in India. How do I ensure that I don't lose flexibility to generate 15 to 18% annualized return? That's he's saying. I understand only few mutual fund house allows investments. Your views?
I think I'm not very familiar. I'm not an authority on US taxes, but if you're moving as a green card, then over time, the income that you generate from India also will become globally taxable to you. That is the situation in the US. That is the knowledge I have, because I have my brother who is doing it, and I hear from him that whatever income he makes from India is also offered to tax in India. Of course, there is this taxation set-offs that can happen. I think it's a question of discussing this with a financial advisor and then come to a decision, and an expert who understands both the US market and the taxation requirements there. But 15 to 18% return, I think, is a little far-fetched expectation, is what I would say.
In fact, if I can take the liberty of telling the audience that if they have any questions they would like to ask which are not covered here, they can mail in it to PMS Bazaar and they will be forwarded to Mr. Krishnan. Sir, if you could pick and choose some of those questions which you want to answer offline, I think it will be a great help to our reader, to our viewers. I have a couple of more questions to go. One is, you've been talking about currency quite a bit and you've given a perspective, but the specific question comes in from Tejas, which says, what's your view on the volatility of the INR during the year gone by, and how do you see it playing it out in the next 1 year? So it's a very specific 1 year minus 1 year plus sort of a view. What is your view on the INR?
See, I mean, 2022, I think the INR depreciated against the dollar was nothing. I think to a great extent, it was a mix of the global scenario that was happening around the dollar. If you look at, I'm sure people are tracking the dollar index. See, the dollar index to the US dollar index, which is benchmarked to a basket of currencies across the world, touched 100, if I remember, it went to close to 117, 118 from a historic low of about 95. So when you look at it, all currencies across the globe depreciated. It was not only the rupee that depreciated against against other currencies. If you look at what happened with the euro or the pound, the rupee at some point actually appreciated a little bit before it depreciated to some extent. So the 2022, I would say, is a question of the dollar appreciation beyond a point. I think the global markets, when they all have said that the dollar has moved considerably beyond what it should have actually moved because of the sort of the global, mainly because of the war and the lockdown on China and other impacts and other things. So it is a sort of, I don't think 2022 should be a benchmark to assess the rupee as a whole. To a great extent, when most of the currency people that we are talking to, are of the view that the rupee will now, in the question, will actually appreciate against the dollar, because the dollar index is set to fall. And if the Fed rates of if what they are now talking of another 1%, which is now going around in the last 2-3 days, we are reading news that another 1% increase is likely from 4.75 to 5.5, 5.75 in the next 6 months. I'm sure we will see a different dollar altogether. And with the sort of the globally, I'm sure, we are all talking of we are now trading, for instance, India, UAE is trading in rupees. There are about 10-15 countries where India is going to trade with rupees. So the dominance of the dollar, maybe in the next 5-10 years, will be very different from what it is today. So I personally feel that we should not benchmark the fall of the rupee of last year with what can happen. I think from a global perspective, I think the only issue that I think many of you may agree is the current account deficit, how we are going to manage. If we are able to control that, I think the rupee may not depreciate further to a great extent than what many people expect it to happen.
I'm going to take one more question, but before that, I'd like to tell the audience that in the recent PMS Bazaar conference, which happened in Dubai, wherein a lot of NRIs participated, we were the title sponsors there. I think there has been a fair amount of conversation in terms of the structural story of India. So you would be well advised, PMS Bazaar would be releasing those videos. Me and my colleagues have participated in several of these discussions, as has Mr. Krishnan. It will sort of start crystallizing a perspective for you in terms of the growth in India over the next 10 years, 15 years, 20 years, with data, with logic, which should again feed into your perception of the way the currency should be. Mr. Krishnan, last question. This is from an anonymous attendee. I don't know the gentleman's name or the lady's name. Dear Krishnan, how is individual endowment insurance policy investment treated for a US-based NRI? The investments are in rupee. Maturity proceeds are also in rupees. The maturity proceeds are tax-free in India. How is it treated in the US? Would you like to take this question, sir?
I am not an expert to answer on the US tax laws, so I would not be able to be giving the right answer, I would say, from a US resident perspective.
No, wonderful. I think that's a great thing. We've got several questions pouring in. I think it's almost reached 26. What I would request PMS Bazaar is to just collate those questions, send it to me and Krishnan. We will just see how we can answer these questions the best. I'd just like to conclude by saying a couple of things. In fact, just one thing. After hearing you, I was listening to you very, very closely, and you elaborated on quite a few issues. What struck me was the beginning of the conversation when you talked about not returning Indian. Okay. If the Indian is not going to return back to India, I hope India gives it a lot more returns, gives him a lot more returns, for him to stay happy wherever he is. So I think this has been a wonderful session. Thank you so much. Would you like to choose the winner out of this?
I leave it to your best judgment, Mr. Vikash.
I think, one of the initial questions which came in about earning in euros and where do I keep the money? I think that set the ball rolling. That was the context setting. I think it was Mr. Veeramali Rajashekharan. I think we should give him the prize.
Very good. Thank you.
Okay. Thank you so much. PMS Bazaar, Akshara, over to you.
Yeah, I just want to thank on behalf of PMS Bazaar as well. So it's a lot to take home today. On a Friday evening, it was a lot to take home. Thank you all, Mr. Vikaas sir, Mr. Krishnan, Mr. Madanagopal as well as Mr. Ajit. Thank you for pulling this off so gracefully.